Kia ora, I'm Bernard Hickey and welcome to my chorus for September the 11th, 2025. I run a video and a podcast and an email newsletter called The Kaka. It's all about Aotearoa's political economy around housing, climate and poverty. This podcast is all about what's happened in the last couple of days around migration, but more broadly, what's happened in the last 40 to 45 years or so in our economic and political trajectory versus that of Australia. And how, particularly around about 45 years ago, we had a sliding doors moment with Australia, where in many respects, we were in a similar situation. Labor governments, firstly in Australia in 1983, and then in New Zealand in 1984, arrived in power with their economies in various states of disrepair and crisis after a couple of years of commodity price shocks in a bad way, and also a long period of stasis in economic policy. And both parties, the Labor Party in Australia and the Labor Party without a U in Australia and the Labor Party with a U in New Zealand, decided to do big reforms. And in many ways, they went down the same track. Both deregulated their currencies and allowed them to float. And many Crown or government-owned businesses were floated and sold off, and there was some deregulation in both economies. But we went significantly further. And today I wanted to talk about how that sliding door moment has meant that we're in a much weaker position now than Australia. And we are seeing around about 201 on average, 201 people on average per day jumping on a plane to go and live and work in Australia. They are being replaced by an average 384 people with temporary work visas, students, workers on farms, workers in retail, workers in services from China, from India, the Philippines, Fiji, Sri Lanka, and the UK and South Africa in that order. And that is part of our, what I call, churn and burn economy. So let's go through that sliding doors moment and look at what we've ended up with to start with. Okay, we know that people are leaving, and that's because there are jobs and wages are higher. So when you look at this long-term chart showing the unemployment rates between Australia and New Zealand, it's not obvious that New Zealand has always had a higher unemployment rate. We did have a higher unemployment rate between 2008 and 2013 or so, and we have one now, about 1 percentage points higher. But actually, for most of that period, Australia had a higher unemployment rate. And you can see, though, in that period from 2002 to 2013 or so, it was about equal who had the highest and lowest unemployment rate. But what we saw over that time was nearly 1/3 New Zealanders leave because the sliding doors moment was already starting to have its impact with a 30%, 20 to 30% premium for jobs, wages in Australia versus New Zealand. When you look at wage growth, there you go, you can see the black line is Australia, wage price index, growth in that a good percentage point higher for most of that period. There was a bit of a gap from 2020 to 2022 as New Zealand pushed through higher minimum wage requirements. But for most of that period, Australia has had higher wage growth. Now, here are the two different paths, the sliding doors moment. And they are two Labor finance ministers. On the left, you have Paul Keating, the Labor finance minister during that period, and on the right, Roger Douglas. Keating went on to become the Australian Prime Minister. Roger Douglas did not. And in many ways, the relationships these finance ministers had with their prime ministers, although both eventually corroded and were destroyed from within, The Australian one happened much later, and that's part of the reason why Australia's path was different. Paul Keating worked closely with Bob Hawke during that first decade of Labor being in power in Australia. Roger Douglas and David Lange fell out after 3 years, and Labor was out of power within 6. In Australia, Labor stayed in power until around 1996, having been in power since 1983, so 13 years versus 6 years. And in many ways, that's a reflection of and the creation of the diversions in our paths. So one of the things that Paul Keating did was introduce a compulsory pension scheme in 1992, starting with a relatively low contribution and then rising over time. It's only just now finished rising. On July the 1st, the contribution of people's wages going into the compulsory pension scheme in Australia is just changed to 12%. And what you have there is the chart showing the scale of the increase in superannuation assets in Australia relative to GDP. And over that period, we've seen continued growth to the point now where it's now over $4 trillion. And that means Australian pension assets are worth about 150% of GDP. Now, New Zealand KiwiSaver funds details came out yesterday showing that they've risen to 123 billion, which is a lot more than people thought. But even then, it's barely 30% of GDP, whereas our housing market is worth 4 times GDP. And one of the reasons for that is that Australia, over that period, as it increased those pension funds, effectively forced consumers to save into long-running pension assets, much of which were invested in real businesses and real infrastructure in Australia. What you're seeing there is the blue line. That is Australia's national savings rate. In 1993, it started to get going and has essentially grown from around about 21% of GDP to 25%. And that's not huge, but it's certainly better than the OECD and significantly better than ours. We did save, though. We did put some money aside. We just put it into residential land rather than pension schemes. And you can see here that some people say all Australian house prices are crazy too. Well, actually, they're not as crazy as ours. And since 2010, our house prices have risen substantially more than Australia's because they just weren't able to put even more into housing. One of the reasons for that, they have a capital gains tax. Even though if you're a rental property investor, it's only 50% of the capital gains tax for the rest of the economy. But it's certainly one of the reasons house prices haven't risen as much as ours have. That's because a lot of that money, and we're getting up towards 4 trillion now, has gone into domestic investments and domestic equities. Some of it's gone into offshore equities, not as much as ours has. More than half of New Zealand's KiwiSaver funds are now invested overseas. And what that's done is turn a persistent current account deficit in Australia into a surplus in recent years. We're not running a surplus, we're still running a deficit. So those lines under zero on that chart show Australia's current account deficit, and the red line is the amount of investment Australia is doing versus its saving. And now eventually its saving is caught up with its investment and it doesn't need to import capital from overseas. There's a couple of reasons for that, one of which actually is New Zealand. So we are now in a substantial current account deficit. We're the red line there. And the gap, sadly and partly, is a bunch of money that we pay to Australia through the banking and, to a lesser extent, the insurance system, because they're Australian owned and they're quite profitable here. They send profits back to Australia. So all through that period, and certainly in the last 25 years or so, Australians have actually spent less than us, or the growth in their spending has been less than us, because they were forced to put it into their pension schemes by Paul Keating. And that's one of the reasons Australians have saved more. They were forced to save more. And The other reason we've seen, particularly in the last 2 or 3 years, is Australia has run more moderate monetary and fiscal policy since 2022. And you can see here Australian and federal state fiscal impulse, as forecast by Westpac on both sides of the Tasman, shows that in the last 2 to 3 years and for the next couple of years, Australia will has had significantly more spendy governments, both federal and state, than ours have had for the last two years or so. And that's been a factor in reducing business confidence here and overseas. What does that mean? Well, New Zealand is leaving at a record high rate and being replaced by people from elsewhere. I'm Bernard Hickey. That was a chorus for September the 11th, 2025 for the Kaka. Ka kite ana.